The air in the trading room was thick with anticipation as the markets closed. Today was the day. Meta and Microsoft, two giants with vastly different strategies, were about to reveal their Q2 earnings. First up was Meta. The whispers had been a mix of cautious optimism and deep skepticism. Would Reality Labs finally show a glimmer of profitability, or would it continue to be a black hole? The numbers flashed across the screen. Meta's Q2 2025 results showed revenue up 18% year-over-year, beating analyst expectations. Ad revenue saw strong growth, particularly in Asia-Pacific, driven by robust performance across Instagram and Facebook's revamped ad tools. Reels monetization was finally starting to hit its stride. Reality Labs, their metaverse division, still showed substantial losses, though slightly narrower than the previous quarter, buoyed by increased Quest headset sales and modest growth in Horizon Worlds engagement. Meta stock initially popped 5% in after-hours trading, then settled around a 3% gain as investors digested the details. It seemed investors were relieved the core business was strong enough to carry the metaverse dream for now. The market was clearly focused on the cash cow. Minutes later, Microsoft's report landed, and the immediate reaction was palpable. Cheers erupted from a corner of the trading floor. Microsoft's Q4 2025 earnings showed revenue up 16% year-over-year, comfortably exceeding forecasts. Azure cloud growth accelerated to a staggering 35% growth, driven by massive enterprise AI adoption and expanding data center capacity. This was the clear star. Productivity and business processes, including Office 365 and LinkedIn, showed solid, consistent growth, demonstrating the enduring power of their subscription services. More personal computing, encompassing Windows, Xbox, and Surface, saw a slight dip in Windows OEM revenue due to a softening PC market, but Xbox content and services continued to grow. CEO Satya Nadella highlighted significant, ongoing investments in AI infrastructure and research and development, positioning Microsoft as a dominant force in the AI revolution. MSFT stock surged over 7% in after-hours trading, hitting a new all-time high. It appeared Microsoft just keeps printing money with Azure and AI. Nadella's vision for AI everywhere was clearly paying off. They were monetizing cutting-edge tech in a way Meta was still struggling with. It's like Microsoft is building the digital infrastructure the world needs, while Meta is trying to build a new world. Very different risk profiles. As the after-hours trading settled, the narrative was clear. Microsoft continued its reign as a dependable, high-growth titan, leveraging its cloud dominance and aggressive AI investments to deliver consistent wins. Meta, while showing resilience in its core advertising business and some small glimmers of progress in its ambitious metaverse bet, remained a story of balancing present profitability with future-gazing investments. Today, the market seemed to reward the steady, powerful climb of the cloud kingdom, more emphatically than the promising, but still uncertain, journey into the metaverse. The contrast wasn't just in the numbers, but in the very definition of their technological ambitions, and how investors chose to value them.